The 5K SnipeAthon is a public trading journey where I'm going to grow $5,000 of my own money to $10,000 trading currency in the foreign exchange market. This is a completely public and transparent trading journey where I give daily and weekly updates of the progress. If you want to follow and stay up to date on this trading journey, make sure you hit like, subscribe, turn the notifications on, and look in the comments to join the Snipers Anonymous broadcast where I update the chat daily on the progress of the account. All right, let's see. All right, welcome to the SnipeAthon, everybody. I'm your host and Chief Analyst Delonte Brady, creator of the Snipers Anonymous Trading Course. And without further ado, let's get into the SnipeAthon weekly update. So last week we had a starting balance of $4,890.21, and we ended the week with $4,968.45. Out of the 8 trades that was taken last week, we won 6, lost 2. So we had a win rate of 75%. Open trades running right now are none. So there's no open profit or open loss. But the net profit or the net loss so far for this account has been negative $31.55. And the net profit loss percentage is 0.63%. So the notes that I had for last week are never forget Yah's grace and mercy. And this actually came up at the last minute because, as you all know, over the weekend, U.S. and Israel did a joint strike on Iran, and the world is at war, right? We're in World War III. I left some trades open over the weekend, which is, nothing out of the normal. And the thing is, though, if any of you got experience training or trading, you know about slippage. And so once Iran got struck by the United States, I'm like, I got these open trades. My stop loss is set. And I told my wife, I said, I'm either about to lose a lot of money or I'm about to make a lot of money. Because normally when big events happen like that over the weekend, once the market opens up, it opens up with a gap. And if it gaps beyond your stop loss, then wherever it ends up, that's how much you lose. And the market opened up, it gapped in my favor. It ended up hitting take profit. And I told my wife, I said, woo, I got lucky. She said, you got lucky? I said, yeah. And she looked at me kind of like, what do you mean you got lucky? And I was like, well, oh yeah, you're right. Well, I guess it was a good analysis. And she's like, good analysis. And she brought up that, oh, that was Yah's favor. And even myself, it's so easy to forget to give all praises and all thanks to Yah for everything that is good in our life, for even for our trials and tribulations and our struggles, because everything is to glorify him. And so I have to remember that as well, which is why I put that in the notes, to never forget Yah's grace and mercy. Even as we're on this call right now, to be able to talk to you right now, to be able to have internet service, to be able to have electricity, right? That's not promised, especially in today's environment. So I thank Yah just for his grace and mercy for allowing me another day of comfort, right? A lot of you on the call right now are also in God's grace and mercy because you're on the call right now. You have electricity, you have internet, and you're able to attend this call. So I just want to give all praises to the Most High for that. Because as we know in the second commandment, one of the 10 commandments, the second one is, ye shall not put any other gods before me or make any graven images, right? In the heaven above, in the earth below, or the earth below the waters, because I am what? I'm a jealous God. And that's not just of other gods, but that's to be taken for what it is. Yah is a jealous God, and he wants the credit for everything good in our lives. He wants the credit for everything good. So we never want to forget that. Now, this week's focus is slow and steady wins the race and stick and move. So we're coming from a deficit of a losing streak. I actually started out this trading journey on a losing streak. Eight eight trades lost in a row. Equity curve was looking real bad, but I kept the faith. It was something that it was a lesson for me as far as ego, and we got that out the way. Now we're getting close to getting back to break even with the account. And so I have to remind myself that it's a slow and steady thing. Like just because we're close to break even, close to being back in profit, let's not rush. We just had the situation happen over the weekend, so the markets are volatile this week. The markets are going to be a lot more unpredictable, and so I have to be very selective with my trades and be very careful. Slow and steady wins the race. Stick and move. I will get into what stick and move means once we get into the actual charts, what that means for me. But right now, before we get into anything, the first thing we want to do is check the news, right? Um, so this week is non-farm payroll. On Friday, we have non-farm payroll. That's something to keep in mind. So on top of everything that's happening in the world, we also have non-farm payroll, which is probably the most volatile week of trading. It's the first Friday of every month, and the markets always move weird during the week. So today is Monday, and a lot of news has already happened. We're actually done with Monday news. We're going into Tuesday. So I trade the euro and the pound, and so I pay attention to the United States dollar, the euro, and the pound. And so that's what's in my news feed. And so for the euro, we have some red folder news at 3 a.m. for unemployment changes, inflation rates year on year, and then CPI. So around this time tonight, or leading into the London at 3 o'clock in the morning Eastern Standard Time, I'm going to be paying attention when we're marking up the charts and doing our analysis to areas of obvious liquidity, because I believe that news is an excuse to move price to areas of liquidity, which provides opportunities for us to be able to find entries and find targets of take profits. So I'll be looking for, obvious areas of liquidity to get swept around 3 o'clock. Then later in the day, we have another red folder at 5 a.m. for the euro, and that's an inflation rate. On Wednesday, we got more unemployment rates for the euro, NBA 30. See, employment change for USD. That's going to be at 8:15 in the morning on Wednesday. See, we got retail sales for euro. So we're going to have a lot of movement at 3 in the morning this week, Monday, Tuesday, Wednesday, and Thursday for the euro during the London. So want to keep that in mind. Non-farm, okay, jobless claims. And then on Friday, of course, we have non-farm payroll. All right, so non-farm payroll takes place at 8:30. I usually don't trade on Friday unless I already have trades going. So I won't be looking to place a trade. If I already have a trade going, of course, I'll do my trade management, make sure everything is, take profits are set, stop losses, if possible, set to end profit or break even. But that's it. That's what we have to watch out this week for is non-farm payroll towards the end of the week. We're going to have a lot of activity at 3 a.m. in the morning, Monday, Tuesday, Wednesday, Thursday. And then tonight, as we're looking at the charts, we want to look for obvious areas of liquidity for that 3 o'clock news release for the euro. All right. All right. So if you guys are commenting, okay, what's going on, Darius? What's going on? Yes, all praises to the Most High. If you on the call, go ahead and drop some comments to let me know you in here. Show some love, and if there's anything that you would like analyze, just let me know. Sound is good, I assume, because no one's said anything. But let's get into analyzing the charts. All right, give me a quick second to pull this up. The first thing we're going to go over is the euro versus the dollar, and then we'll get into the pound versus the dollar. All right, let me make sure everybody can see my screen. I think we're good to go. All right. Before I get into analyzing the charts too, I want to point out last week's trade, the best trade that I had, which was it was a short, and we had made $32 on that trade. And as you can see, where the target is at, that's where I entered, and this red line is where the stop loss was at. Now, this right here, this is where the market closed over the weekend. So price was actually headed up to my stop loss. I had two positions in at the time that the market closed. Each one of them was like $13, in a negative. So I had a total of $26 getting ready to, basically hit. It was about $30 I was about to lose, which was going to put me further in the hole. If it would have gapped up, that could have turned into easily a $60, $100 loss, and we would have been having a different conversation. So again, just all praises to the Most High for showing me favor, getting us closer to the goal. Once price open, you see this gap right here. Price dropped down about 60 pips. All right, and it came up and it didn't even fill all of the gap. So this is actually a part of our analysis. Now, this is going to be an area that we target because now we have imbalance that hasn't been filled. And so that's going to be an area that we target for take profit and for rejection and a possible sell. All right, so I always like to start from the higher time frame. We're going to do some basic support and resistance. I'm going to clean this chart up. And what you're looking at right now, the euro it's been uptrending, but we're kind of in the range from the higher time frame. We're still within a range from the higher time frame. As you can see, let me pull out my arrow. Price is pretty much ranging in between these two lines. All right, so we broke above here, came down, bounced, broke down for a little bit, came back above, bouncing, right? And so price has been playing around within this range. We even poked up out of the range a little bit, and then we fell right back in the range, retested the top, and now we're falling. And what it looks like we're headed possibly back to the bottom of the range. Now, the United States is also injecting about, I want to say 14 billion into the markets through buying treasuries back and things like that. And so that is signaling bullish for the dollar, which means what? What do we know about the base currency in the quote? If the euro is the base currency, if the dollar is going to, or we're expecting the dollar to increase or to gain strength, then we're expecting bearishness from the euro. So what we're seeing right now, as far as the euro kind of falling, I expect it to actually continue falling throughout the rest of the week. Now tonight, I wouldn't be surprised if we went bullish for a little bit, and that bullishness was a pullback. And so that's what we're about to look at right now. We're going to look at a possible imbalance fill, and where will we sell from, or where will we expect the market to continue selling from. And to be honest with you, to keep it simple, I have two areas that I'm targeting. One, I always like to target liquidity. And so we have some liquidity here or some highs. If it's going to continue down, I would like to see it sweep the liquidity first. And so we're going to look at this as a target. I'm going to drop down to the 4 hour, see a little bit more detail. And let's put the fib on it too for good measure. How far did this extend, or how far is it going to extend? All right, we came down to the 161.8 extension, and we're starting to bounce off of that, which was also a previous high here. We see we came up, did a pullback, and then the market really continued up. So we're revisiting this area right here. So let's go ahead and mark this up as a demand zone. Let's turn. All right, so that's our demand zone. Let me check to make sure you guys aren't messaging. Be coach, I'll sit with the flu. Oh, that's cool, Darius. You good, man? All praises to the Most High that you on here typing, man. That you all right and that you beat it. Glad you good. All right, so we extended to the 1618. We see this is our area that we're pretty much starting to reject from. What's an expected pullback? Let's measure from the high to the low. Let's look at some obvious areas. First, we have the 50%. What lines up with the 50%? I like that break of structure right here. Right? We had our high, we had our low, we had our lower high, and now we're at our lower low, right? And right where the break of structure happened, or where that lower low is at, happens to be where the 50% is at. So I'm going to mark this up for future reference when we drop down to the lower time frame. Right, and this is our break of structure. All right, now let's look at the 618 of the fib. This is another place that could be a good entry. Why? Because we got a lot of candle closes around this area. See how price came down and really just played around in this price area a lot, and then we finally broke down below it. So this is another area that we could look at for an entry. Second sell zone. And then the golden pocket happens to be in the area where the imbalance is. And like I said, I like to see liquidity get swept, but it may not come back up that far. All right, so we've used the fib. We got a break of structure here, which happens to be around the 50%. We have our second sell zone where we got a lot of candle closes, and that happens to be the 68%. And then we have the imbalance fill here, which happens to be the golden pocket. Now, let's use our 10 and 144 EMA. We know that once we get across, we expect price to come back up to the EMA. And once it touches the EMA, that's where we would expect to sell. We got a couple touches and then price fell. Now it looks like we have another retest that we could go for. All right, so now we're also looking at the EMAs. So let's drop down to the 1 hour. Got that nice gap. And what are the EMAs telling us for the lower time frame? See how that EMA lines up with that second sell zone? What do we call that, y'all? What is that called when we have multiple confirmations of entering for a trade? What's the word that we use? What is that called? Let me see if anybody is going to get it. Drop it in the comments. What is it called when we have multiple confirmations of why we should enter a trade? Confluence. Exactly. Good job. I believe that's Avagicel or Avagichi. Man, y'all, you killing me. But thank you, Avi. I'm gonna call you Avi. That is correct. Confluence. Khalil, got you. That's correct, Khalil. Letty just wanted to stop by and say hello to my eldest son. Great job. Oh, what's going on, man? Hey, everybody, a shout out my mom on the call. Thank you for tuning in and supporting. I hope you're getting value. All right, so it's called Confluence. All right, so I actually like this area for a sale. because we have the EMA lining up with the second sell zone, which happens to be the 68% of the fib. So I'm gonna go ahead and mark this up for an area to possibly take a sell from, depending on how it approaches. This will be a sell zone. Now, of course, I want that to look different from my buy zone. And let's go ahead and label it too. And so this is going to be the first sell zone. All right, and then we have our imbalance. Let's go ahead and delete this line here. We'll keep this here for the break of structure. And we're going to call this the second sell zone. All right, and the last sell zone would be above these highs because I would be expecting a liquidity sweep. Now let's see, what would a sensible area to sell from? I actually like this candle right here. All right, so this would be the last area that I would attempt to sell from. So we're going to call this the third sell zone. All right. Now, if price is down here in a suspected demand zone, is it possible for us? Why people sometimes ask why not buy up? Why not buy up to the sell zone? And I do that. I do that sometimes. But what I've come to find out is that when you're trading against the tide, the higher time frame order flow, which we know that things have been bearish, we've been flowing down. It's just to counter trend trade, you can catch it, you can, but just keep in mind that you're buying against the current. And more times than not, I've tried to catch pullbacks and price end up going lower before it goes up. So because of what's going on, in the world, and because it's non-farm payroll this week, I'm going to opt out of trying to buy up to the sell zone, and I'm actually just going to wait. These are the targets that I expect to get hit tonight. Remember, I mentioned earlier that 3 o'clock in the morning, tonight, or tomorrow morning, there's going to be news releases for the euro. And so those news releases in between then and about 8 o'clock in the morning, when the New York session starts, that's when I'm expecting price to reach up into these areas. And once price reaches up into these areas, that's when I'll decide if I want to put on my positions. So this is what we have for the euro. Everybody that's in the Snipers Anonymous broadcast, I will drop this in there. You guys seen it, so I'm gonna drop it in the chat so you guys have the markup. I hope you guys are taking notes for your own, to mark up your own charts, and so you have a reference for yourself. But yeah, this is what we have for the euro versus the dollar, looking to be selling this week. And these are the sell zones for tonight. Okay, now next, let's look at the pound versus the dollar. Now, before we look at the pound versus the dollar, I want to show you guys something, why I like trading the pound versus the dollar along with the euro versus the dollar. This is euro GBP, right? So this is the euro versus the pound. This shows me if the euro is having true strength or true weakness, or if the pound is having true strength or true weakness, because I can measure both the pound and the euro against the dollar. And if the dollar is strong, of course, the pound or the euro is going to be weak. But to get the true, kind of like what's really going on, I come look at the euro versus the pound, because like this, in this case, We came up and now price is starting to fall. Euro is the base currency in this pair, which means euro is determining the direction. And so if we see the euro versus the pound dropping, that means that the euro is weak. It's weak against the pound. If we see the euro going up, then of course it's strong against the pound. And what I'm seeing right now is I'm starting to see potential weakness. Because of this rejection right here, we have been trending up, but this was a very strong rejection. And it's very possible that we're now about to come for these lows, right? We're real close to this low. Let me turn these EMAs off. We're real close to this low right here. And so it's a possibility that the euro is going to continue weakening against the pound. And with that, I feel really good about sales on the euro, especially if we come up, to these areas and we continue to weaken on the euro versus the pound. Now, why I also like this is because there may be an opportunity to buy on the pound, even though generally the pound and the euro usually move in the same direction. The pound versus the dollar and the euro versus the dollar usually move in the same direction. If the euro is abnormally weak against the pound, in rare cases, that presents buying opportunities for the pound versus the dollar. And as y'all can see, we're currently strongly rejecting from a demand zone. And if we drop down to the lower time frame, we see we're starting to form structure, and we also have more imbalance to fill because, like the euro, the pound also opened up with a gap at market open. And so we have imbalance here. Could possibly get filled. Now I feel better about a buy on the pound than I do for euro. So let's look at this. Like to follow the footprint. All right, so we're coming from this buy zone. We had a strong rejection here. Market came back down and pushed up and went above the previous high. And so I'm targeting this area right here. Let's drop down to the 15-minute. See what's also going on. And for good measure, I would say put the stop loss down here below this low. And it looks like we're really consolidating, even though it's starting to reject. This is considered consolidation. And so I wouldn't be surprised if we come back down below this low. Because of what's going on with the dollar, I would like to see, if I was going to take a buy on the pound, I would like to see price dip back below this low right here. If we come back below this low, that gives me a better trade setup. I can set my my stop loss a little tighter. Right. So 40 pip stop loss. Of course, I want to go for more than that. I would be looking for the imbalance to fill here. So looking at a 40 pip stop loss, 115 pip take profit. That's what I would be looking for with that. And this is just hypothetical. This is not a trade that I'm probably going to take. The euro, the sales, I'm looking for that. But this is just kind of hypothetical. Let's set it up. Let's see what happens. Let's see what happens. So this is what I have for the pound. And then as far as sales, this is it. the imbalance. I would expect the imbalance to get filled and for price to sell off from here. All right, let me check the comments. Cool. Now let's look at one more thing before we move on. Before I ask you guys what you want me to analyze. Something else that's very important is looking at the Dixie, the DXY. So this is the US dollar. This is not a currency, it's an instrument. It's just a measurement of the strength of the dollar. And this can be used in any pair that has the dollar included in it. So that's USDJPY, right? Some of you trade the United States dollar versus the Canadian dollar, the euro versus the dollar, the pound versus the dollar, anything that has the dollar in it. If you're trading anything that has the dollar in it, you want to be analyzing the dollar itself and you want to know what's going on with it. So I've been following the dollar and it's been in this channel since February, since early February. So it's been following this channel. It's been breaking out a little bit, but for the most part, it's been really following this channel. And what it looks like is that we're starting to break back down into the channel. And so I'm expecting price to drop back down to the bottom of the channel and reject. And I'm actually expecting the dollar to create higher highs this week because of the liquidity that the Fed is planning on injecting into the markets this week. All right, so I'll place the eye above here. This is a, you know what? Let's choose a dollar. Dollar sign represents liquidity. Some more liquidity. All right, so we have this high right here, and then these highs that I'm expecting the dollar to target this week. And so what does that mean? That means that if the dollar is strengthening, anything that the dollar is going against should be weakening, which is why I'm still bearish on the euro. And based on what I'm seeing right now from the dollar falling back down into the channel, tonight I'm expecting the dollar to fall, which means I should be expecting the euro to rise. And then I'm expecting the dollar to continue bullish once we tap, at the bottom of the channel. And if it lines up right, that will be our sell area on the euro. All right. So that's that. Is it anything that you guys want me to analyze? Is there anything else that you guys want me to look at that we haven't gone over? And does anybody have any questions? All right, the floor is open. Any questions that you guys have? I'm an open book. And while I'm waiting on that, I'm gonna pull up the trade tracker for the SnipeAthon just to show everybody who may just be coming into this. You can see how this journey started out. All right, so let me make sure you guys can see this. Okay. Let me remove myself. All right, so this is the Snipers Anonymous trade tracker, and specifically, this is the trade tracker for the SnipeAthon account. And let's go over here. You guys see all that red? I started out this public journey, first trade being a loss, which I can remember, and we remember the lesson. You can go back and look at that one, the weekly update, the first one. It was embarrassing for me. And it was embarrassing because it was like the first trade of this public journey, was a loss. And then After that, 7 more losses in a row. And it's been a long time since I had, went on a losing streak, but I had to check myself. And as you all know, I compared it to the story of Saul, because he was very prideful, and he was very one of his weaknesses was he cared too much about what people thought about him, and people's perception of him, which ultimately led to his downfall as king, because that led to ego and more pride, and him not giving thanks, to Yah, and not praising Yah for all giving Yah all the glory. And Yah end up taking away his rulership as king, and he found another king, David, right? But yeah, had a rough start, and from there, started to work our way back. Had a couple more losses, and things have been going better. And this is what the equity curve looks like now. We started off going straight down, right? And you see we've been slowly working our way back up. But this is why I said slow and steady runs the race, because we're getting back close to break even. We're getting back close to breaking that threshold. What you'll see with your trading, if you actually document your trades, your trading journey looks very similar to the market. There's downtrends, there's uptrends, and there's consolidations. There's areas of resistance, there's areas of support. It's crazy how Yah really he incorporates everything is the same. It's called fractal. Life is fractal, right? As above, so below. It's just his design is in everything. And so even in our performance and the way that we trade, our losses and our wins, it mimics the market. Up, down, uptrends, downtrends, consolidation. And so right now I would call this consolidation, because we haven't come back above the high of 5,000. And so it's not a downtrend, it's not an uptrend. We in consolidation right now, and we have an uptrend within consolidation, right? So that is the Snipers Anonymous equity curve. We started off with 5,000, and we have worked our way back to 4,976, and that's because of a buy limit that was hit while I was asleep. But I closed that out early. But yes, so that's where we are. We are 24 bucks away from break even, y'all. Right. Okay, so that if nobody has anything they want me to analyze, no questions for me to answer, we've been on here for 45 minutes. That will wrap up the Snipers Anonymous and the SnipeAthon weekly update. Like I said, everybody that's in the chats, everybody that's inside the Snipers Anonymous broadcast, I will post those markups tonight. And if you aren't, make sure you check the description of this video. Make sure you check the description of the video and check out all the links so that you can stay updated on these calls. I will be doing this every week at the same time at 9 o'clock. It'll just be a live update. That way I can update you guys on what's going on, and then I can also analyze the charts live. And if there's any opportunity for us to, trade live, we'll do that as well. But yeah, that wraps it up. That wraps it up for week 3 of the SnipeAthon. I appreciate everybody who tuned in. Everybody, I pray you all have a peaceful rest of your night. I hope it's a restful one. And, Yah willing, we wake up tomorrow for another opportunity to do his will and, to strive for our goals. So like I always say, thank you. Like I always say, becoming a master trader isn't about mastering the markets as much as it is about mastering yourself, and discipline before profits, but always faith over everything. Love y'all. Have a good one.